Let's bring in Ed Moya, Chief Market Strategist at OANDA, and Jay Hatfield, CEO and founder of InfraCap. It's so great to see you both. Jay, you're talking about a range-bound market for oil, the commodity itself, but there are some opportunities for investment.
Yes, correct. We think that given that we don't see a huge upside for oil with the trade war really limiting demand. So we think it's better to be in the more conservative side of the energy sector, which would be pipeline and storage companies, often structured as MLPs, because most of those companies have limited commodity exposure. They're just exposed to volumes. And actually production is holding up well, particularly in the Permian, as not overall prices, but the prices the producers see.
What are some of the names that are in that pipeline?
Some of the largest, one of the largest and most undervalued name would be Energy Transfer. It has a 9% yield, but actually an 18% cash flow yield because they have 2 times coverage. That stock has been down even though they've beat earnings and even announced asset sales that are likely to be able to allow them to increase the dividend and buy back stock.
And what are you thinking, Ed? I mean, when we talk about what we're seeing?
I think right now, when we take a look at the volatile price action that we've had over, especially the last few days, right now, energy is trading strictly off of the trade war. And I think that right now we're seeing the president be forced in a position where he has to decide, does he want to win re-election? And if so, he needs to win this trade war, or at least have some type of de-escalation. And if we do see that, I think that you're going to see that global demand relief provide some support for energy prices.
Yeah, and it's interesting because we did see the rig count moving to the downside overall, but the demand is still there and the consumer is still strong, right, Jay?
Correct, yes. So there's the one positive thing for U.S. demand is that gasoline prices are down 5% year over year. So, and there's about a 25% sensitivity to the price. So we're seeing fairly strong gasoline demand. And the U.S. consumer is in great shape because we have really record low interest rates, close to it, at least we're 1.5%. In prior recessions, those rates have been 7%. And so the U.S. consumer is in really great shape because they're refinancing mortgages and really holding up demand for energy in the U.S.
There's some thought about some more M&A activity in the group. I mean, any thoughts on that, either one of you? Ed?
I actually think we're going to probably see more of it.
Yeah.
And as you were mentioning earlier, the interest rate environment is actually, it's going to get even more attractive. I think we're going to see multiple rate cuts from the Federal Reserve, and I think you're going to start to see this become a much more friendlier market for acquisitions and longer-term deals.
Your thoughts, Jay?
Well, particularly in the pipeline sector, there's infrastructure funds that have low required rates of return. They've already bought one whole company out. There's 3 other companies, including Energy Transfer, that have either announced or acknowledged.
What's the ticker symbol on Energy Transfer?
ET, the extraterrestrial. It's a strange,
but
but nevertheless, it's announced or at least acknowledged that they have major assets for sale, and there's a robust market. Usually, the infrastructure companies and other private buyers are willing to pay 13 to 15 times cash flow, but yet the companies are trading at 9 to 10. So
and we just had that whole thing with Chevron Occidental, Anadarko. Do you have any names in the group that you like more than others? I was looking at, for example, like Diamondback was a good performer. Are there any that you like more than others or stay away from quickly, Ed?
Unfortunately, I'm unable to give specific recommendations.
Jay?
I would just say, as a category, Permian producers. That's what Anadarko was. So Chevron was left at the altar. So I would consider any Permian producer to be a potential target.
Look at that, Ed. We're seeing some of these Hess, Anadarko, Kinder Morgan. We've had some great moves in this group, right, Ed?
We've seen energy companies really benefit. I think we've had a big shift from traders having heavy positions with tech and industrial, and we've seen real estate, consumer staples, and also energy plays get a strong bid here and for the most part in the last few months.
All right. Great to see you both.
Great. Thanks for having us.
Thank you so much. We're going to watch for any more action in this group. And Dorian is coming in, too. That pressures this type of commodity. Ed Moya, Chief Market Strategist at OANDA. Jay Hatfield, CEO and founder of InfraCap. Thank you both. Thanks for joining us here today.